Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and this time around, we have a special video for you. As we close out 2025, we're running through our 5 top videos of the year. These interviews were our most viewed over the last 12 months, and they include experts' thoughts on gold, silver, and much more. I really enjoyed making this content and reading your comments, and I'm excited to continue in 2026. If you have thoughts on people you'd like to see interviewed or topics you want to see covered, definitely leave a comment below because it helps me keep bringing value to the channel. Thank you so much for all your support over the last year and all the best in 2026. Without further ado, let's get into our countdown of the top 5 videos of 2025. Kicking off the list in the 5th spot is Don Durrett of goldstockdata.com. In this January interview, Don shared his silver and gold price outlook for 2025, as well as his 15 must-own silver stocks. We don't have time here for the full list, but I'll leave the link to the video below. For now, here's Don talking about why he's so bullish on silver and gold stocks.
So the silver miners are just unbelievably cheap. I mean, if you throw an $80 number out there on silver on their free cash flow, they're just so cheap. I mean, like I said, Newmont's 4-bagger, you can imagine what these silver miners are. It's just, it's kind of mind-boggling that these quality, usually, I mean, I like to be overweight quality producers because I think they have the best risk reward. And people can buy quality producers today that have unbelievable leverage if we get to $4,000 gold. Now, I also say that if you don't believe in $4,000 gold, don't buy any gold miners, don't buy any silver miners. And you got to believe it. Don't do a lottery pick, well, maybe it'll go to 4,000, so I'm going to buy it. No, have conviction. If you don't have, because these things are going to go up and down, they're going to be very volatile.
Peter Grandich of Peter Grandich and Company is next. This interview is from all the way back in February when gold was still around $2,800 per ounce. Peter talked about how 5,000 was no longer sounding outlandish to him, and also explained how the higher gold price could impact mining companies.
What I do expect is that the gold mining companies now are basically going to print cash. Their free cash flow is just going to be records after records. Fourth quarter will be due out soon, but now with gold at 2,900, the next couple of quarters, and they'll be one of the few sectors that will probably see dramatic growth in earnings because the regular stock market is priced to perfection. Even the biggest bulls are not expecting a great increase in earnings. So that will help maybe get some interest from the financial service community, but they're never going to go back and own gold in a big way. They're just not.
Vince Lanci of Echo Bay Partners is always a popular guest, and in mid-October he helped break down unusual dynamics in silver, which had broken through $50 per ounce.
There's no other way to describe it. There's a crisis in London's liquidity. Now, liquidity is a word that people throw around. What I mean is London doesn't have enough silver to service its own customers right now. Now, they barely have enough. Let's put it that way. They barely have enough, and they're running low on extra inventory. And the extra inventory, historically, through the years, until I'd say COVID, if London had a shortage of silver, they could buy it from the U.S. or they could borrow it from the U.S. You could lease silver as well because it's not going to get destroyed. It's here, it's forever, and it's in very, very high demand right now, but it's out there. It's not destroyed, and it's mostly fungible. There's no crop or weather patterns that affect it, right? And so in the past, forever, London would, if it needed silver, buy it from the U.S. or buy it from Asia or buy it from specifically China, or it would get it from producers, or it would get it from scrap. The problem is, fundamentally, there's a shortage of silver supply above ground that's available. I'm not saying there's a shortage of silver, but there's a shortage of available silver. So,
Ed Steer of Ed Steer's Gold and Silver Digest comes in at number 2. This interview is also from mid-October, and in it, Ed weighed in on the silver market's complex inner workings. Ed also gave his thoughts on the precious metal's long-term prospects.
Charlotte, it's going to get even worse as time goes on because, we're going to see gold, what's it, 4,000 now? once it hit 5,000 or whatever, even the silver at $100 or $120 an ounce, or 150 or 200, because I figure it's going to be $200 to $400 an ounce at least before this is all over. And hey, you're old enough to remember when silver was $400 an ounce. I mean, gold was $400 an ounce. Now silver is going to be selling for the same amount. But here's the thing that people can't visualize. As when silver blows sky high, and it will someday when the powers that be decide they're going to take their foot off the price, the thing is that it will not be available at any price. You can go to any bullion store, it will just not be there. The wait times for silver, as some people they call it, at some point it will become unobtainium. And that day is coming, trust me.
Finally, our most popular interview of 2025 was with none other than Rick Rule of Rule Investment Media. In this early November conversation, he said he had recently sold 25% of his junior gold stocks. He also explained why he did it and how he redeployed that capital.
We were in a period 5 weeks ago where there were no asks, there were all bids. And I've learned in the market to do what's easy. If there's no bids, be a bid. If there's no asks, be an ask. And the sector was white hot. There were so many junior financings. And when a company's financing, they're telling you that your cash is worth more than their stock. Well, they should know what their stock is worth. Since they were selling, I decided I would sell some too. But what was most important to me was personal. I've been a heavy investor in the sector since 2020. And I was at a period of time where I could, by selling a quarter of my position, recoup all of my capital and pay the capital gains tax and have the rest for free. I can be very patient, Charlotte, with that remaining 75% because it stands me zero after tax. It was a personalized decision.
You can find the links to the full interviews with Don Durrett, Peter Grandich, Vince Lanci, Ed Steer, and Rick Rule in the video description if you'd like to hear more.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.